Rohr here with an early global view on Tuesday, January 13th, 2015. It's currently 6:30 a.m. U.S. Central Time. And it's been an interesting several days with rather still weaker than not fundamental influences. So what does all this mean to the markets? And we, of course, are typically starting with our S&P 500 future, hourly chart on the left, 30-minute on the right. And as you can see, very interestingly, back on Friday, after the constructive initial response to the U.S. employment report, after the push-up and gap higher on Wednesday's FOMC minutes release, the market's gone into a reaction. And especially, as we pointed out right away from Friday morning, 2052 to 2050 was important near-term support. Once that was broken, it diffused the upside runaway aspect of the 30-minute chart, followed eventually by the hourly, and that left the market back under pressure. But when you ask, well, where did it fill out to? If you look back at the close from last Wednesday, back in the 2020 area, it filled out pretty much right into 2020 with some slippage, but never spent any reasonable amount of time much below 2020 or so. And that set the stage for today's $11 higher activity. Markets back up around 2033 at present, and that still leaves the important higher resistances up at 2036 to 40, which the market slipped below last Friday, tried a last gasp attempt to get back above it a bit late in the day, but could not sustain that, and back up at 2050, where of course 2050 to 52 is our recent congestion and down break.